Aron confirmed naked shorts, and I don't think a lot of people fully realize that. And I want to go over the significance of exactly what he said and why he articulated the words he did, how he did. Because that is something to be very bullish about. And regardless of what you guys see other people post in the comment sections, you should also see that as a bullish thing. Bearish in a weird way should be bullish to you in that regard. And I want to clear that up for you guys because you guys are the ones to see the comments when you yourself are commenting down there. But on the other hand, I do want to talk about this Russia situation because people don't fully realize what that is doing at the current moment. This is a huge, the biggest domino falling that we have ever seen. And if you guys are unfamiliar of what a domino means, why I am talking about a domino, because you know how when you're a kid, you're playing dominoes, you set up a long trail to knock over all the dominoes. Well, this is a huge domino that just fell to start the next path. And I don't think a lot of people have fully realized that. So I want to go over it here in this video. Hit the like button, subscribe to the channel, do what you guys got to do. If you guys want to come trade with us as well, link down below in the pinned comment. Also, get yourself some free stocks, link down below in the description for Webull, Mumu, and Public. But getting straight into this video, Aron said on the earnings call very clearly, and he said this for a reason. He was confirming naked shorts. No other way to put that. He said retail investors own 90% of the outstanding shares. Now, call me tinfoil hat, call me whatever you guys want. But I think it's fair to say that above any institution, above any hedge fund, or certainly any retail investor, Aron knows best what's going on to AMC stock behind the scenes. He knows people. He's literally the CEO of AMC. He said 90% for a specific reason and only one reason, to let you know that shorts have a lot of synthetic and naked short positions. Much the same way during his call with Trades back in August, he dropped the camera to reveal he was wearing shorts. He was asked about that during Melissa Lee's documentary on the ape movement, why he did that. He laughed and said he would not comment on that. Why? Because you are not allowed to comment on such things like shorts or synthetic short positions or naked shorts if you are especially a CEO of a company in question. So when you look at it like that, he said 90% instead of what he previously said back again in August, 80%. So why is that such a big deal? Because if we own 90% of the stock, the insiders to AMC own a couple percentage points. The shorts own, as far as the free float, the AMC Ortex data is concerned, own about 20.91% of the float. Institutional investors own about 32% of the float of AMC. That means you're way above that 100% threshold. Now, you guys might be saying, is this legal? Can they legally do this? Well, they can legally do this. They can legally do this. Besides anything that you have ever heard, regardless, I should say, of anything you've ever heard, they can do this. And nobody's going to say anything different. Nobody's going to go against the people that pay the SEC, that pay all these fines to the SEC to help them keep their jobs. Nobody cares that much. They don't care about you. They don't care about anything else. They care about the billionaires that invest their money in the markets, and they want to make sure to those billionaires that they try to keep the markets as fair as possible and clean. We'll just use that word. Keep the markets as clean as possible. But let me explain to you guys why this is actually possible to do. Because market makers, market participants in general, have an obligation to make sure you can go in, buy or sell stock. at any time, no matter if there is a buyer or a seller or if there is not a buyer or a seller. So they are allowed to do this. That's why you have long settlement times like T plus 35. So without getting into that too much, we know that happens. We know it's legal for that to happen. Why do you think GameStop had 150% short interest? It happens. Nobody goes to jail because of that. But what causes that to turn into a major problem like we've seen with GameStop? Well, it comes down to the fact of when a lot of people have legal rights to a share, like let's say you bought stock in AMC. I know this is a long-running discussion between a lot of creators that quite frankly have not been in the markets too long to realize that if you paid money for a stock, you have a right to sell your stock at any given moment for that set price. But you don't see the mechanics going on behind the scenes. So all you really see is, hey, I bought a stock for, let's say, $20. You bought a share of AMC, $20. You want to sell it at 100. You don't see the process of the share trading hands. No share is even going to trade hands when you're talking about a stock that's float is sold over multiple times over and over again. What you see is you bought it at $20, you sold it at 100 or 500 or 1,000, and you get that money credited to your brokerage account. The only obligations the brokerages really have is to deliver you your money at the spot value of the security when you sell it. So that's the big problem, is if everybody, let's say, 3 or 4 or 5 times the float is trying to redeem their stocks at the same time, or for much higher than you acquired your stock. That puts the shorts in a bad position. That puts the hedge funds, that puts everybody, that puts the brokers in a very bad situation. So what does all of this mean? This means that the more people buy and hold and the more float we acquire, that ultimately, no matter how long it takes, when AMC does squeeze, there's going to be so many people with a right to AMC stock that you are going to see a short squeeze the likes you have never seen before. You thought GameStop was big? Wait for AMC. Now, I know there's a lot of talk about SEC rule changes, about anything and everything under the moon. But does it all matter? I mean, depending who you ask, I don't think any of that matters too much. Like I said in the beginning of this video, I like to compare those things to single dominoes that fall. And if you're looking at a whole domino, row, there's a lot of dominoes that gotta fall before you get to the end and you knock over the big one, which the big one in this analogy is the AMC MOAS. And we just had another big domino fall, which I want to get into in 1 second. But I want to talk about this one thing just briefly, that nothing matters in this squeeze until liquidity is dried up, because a margin call does not mean shorts have to be forced to cover. I have personally got one margin call before. This was years ago. And what they say is, hey, you have 2 days to deposit X amount of dollars in your portfolio, or we are going to sell your portfolio, pay us back, and you will get to keep whatever's left over. That's a margin call. What a forced liquidation would be, hey, I didn't have enough money to, make my portfolio a certain value, so they sold my whole portfolio. And that's what you're going to see happen to the hedge funds that specifically have a lot of naked shorts or just a lot of short obligations to AMC stock when we do start to rally, because we have done so much due diligence on this. It could make you blue in the face. You know the trade. I know the trade. If you don't know the trade and where we currently sit, then you really need to read a book, learn about fundamental analysis. You need to watch more videos. You need to do something, because we are at our fundamental valuation. So you're pretty much at the point where you've absorbed all of the losses that you are going to get. Right now, you're basically buying AMC at the book value. So shorts, if they were smart, they would get out of their positions now, but they are not, because this is one big egotistical battle against the apes, because they want you to fail and they ultimately want to win. So that's the scenario around why Adam Aron said retail owns 90% of the float and not 80% of the float. That one key detail lets you know and confirms to you yet again in another very cryptic message that there's a lot of naked shorts out there in the marketplace. And I can believe that all day. He's the CEO. He knows what is going on with the shares in his company. That's very obvious. So if you want to argue that, leave a comment down below. Let me know why that is bullshit, why there's not synthetic shares and a lot of naked shorts. Let me know. Let me know your thought on that. Very curious to see what you guys have to say about that. But I do want to talk about the big other domino that just fell. As you guys do know, Russia was just downgraded to CCC-. That means that an obligation rated CCC is currently vulnerable to non-payment and is dependent upon favorable business, financial, and economic conditions for the obligor to meet its financial commitment on the obligation. It says investors use sovereign credit ratings as a way to assess the riskiness of a particular country's bonds. Standard & Poor's gives a BBB- or higher rating to countries it considers investment grade, and grades of BBB or lower are deemed to be speculative or junk grade. Russia, before this downgrade, was rated as BBB-. So that means that the country it considers investment grade. Now they're CCC-. That means they are on the brink of going completely bust. A lot of banks will not even use this as collateral before this happened. Now they are not investment grade. They cannot be used in investment practices with other banks as collateral. Why is this such a big deal? Because there is a lot of exposure to Russia. If you guys have not heard about this already, just please, get a grip on it, because there's a lot of exposure to Russia. Citigroup, 10% of their market cap exposed to Russia. Other banks as well, ones you have not even heard of, are deeply exposed to Russia. And as we can see right here, Russian stocks in London wipe out 98% of value in 2 weeks. Listen to this. The Dow Jones Russia GDR gauge, which tracks 11 of the largest Russian companies listed in London, fell as much as 81% Wednesday, taking a decline since February 16th to 98%. Depository receipts for Sberbank have slumped 99% this week, while Gazprom fell 98%, and steel provider Severstall PJSC lost almost 100%. Rosneft Oil Company tumbled 79%, and Luke Oil PJSC sank 99%. So, why is that important? Well, because if you were a hedge fund and you were going to bet on an emerging market that was underdeveloped, that could see a lot of growth, that was a very safe trade, I would have made this argument that Russia was probably a great place to invest in. Russia, already a somewhat developed country. They have a decent sized population, about 167 million people. You could see them developing a lot faster than something like a Cuba, right? Or something like, in India. Something, it's more developed than not at this point, right? But why was Russia so desirable for institutional investors, hedge funds, and banks, buying their government debt as well as their stocks? And why do so many banks, hedge funds, and institutions have so much exposure to Russia? And why is this such a big deal? Well, look at this. Debt to GDP ratio by country 2022. Now, before we get into this, you need to know that America is one of one. It's the only country of its kind. Why? Because we have this ability to print as much money as possible, and that is simply because we have the petrodollar. No other country can buy and exchange oil for currency unless it is in US dollars. That's why we have such low inflation. That's why we are the reserve currency. So we can kind of get away with printing a lot of money and not have to face the consequences for it. So we can afford to have a very high debt to GDP. Whereas other countries, not so much. So let's take a look at this. Right? The number one most indebted country is Japan, with 237.54% of national GDP or debt to GDP ratio. Very indebted company. Next, Venezuela, Sudan, Greece, Lebanon, Italy. And then we're down here at about 106%. I believe this is slightly older. I believe the United States is like 130%. But nevertheless, this will work for what I'm trying to explain here in this video. Scroll all the way down through all of these countries. I mean, you got Turkey, Indonesia, Moldova, New Zealand, Chile, Saudi Arabia. You got all of these countries. Zimbabwe, where they have inflation of billions of percentage points every single year. You see Russia down here, 13.79% debt to GDP, 145 million people that live there. That's why Russia was so attractive. That's why there was so much investment in Russia, because they had very low debt to GDP. If you were going to bet on an emerging market, you would bet with Russia. Russia is about 15 times smaller of a GDP than America. About the same for China as well, Russia compared to China. So that's why you have so much exposure to Russia. And now all of these investments to Russia or in Russia have went to zero. So hedge funds have a lot of exposure. Like, look at this hedge fund. Hedge fund H2O holds on to ruble bets as exiting would be a gift to Putin. Here's the key. Not a lot of hedge funds, institutions, or banks want to actually come out and say, hey, we have a lot of exposure to Russia and this could be a problem. You will hear about this more on the next earnings call, unless they're all just corrupt as shit and they just don't say anything. That's always possible. I mean, they have the ultimate say-so. We're not auditors. We don't know until they say something. But even hedge funds, some of them are coming out and saying, hey, we have bets on Russia, and we've definitely lost our ass, but we're still holding on. And this is only one of many. Like I said, Citigroup announced they have $10 billion of exposure in Russia. Worst case scenario, they lose all $10 billion. Their market cap is a little bit over $100 billion. That's 10% of their total market cap in exposure over in Russia. Other banks and hedge funds and institutions, they have a lot of exposure as well. And a lot of that exposure was probably used to service some of these margin calls and to be put up as collateral. Because like I've said in a couple videos now, with a debt to GDP around 13%, the risk of default here, very, very low. Before this Russia invasion, before all of their stocks and government debt went to zero. You could also make in between about 4.5% to 6% by owning Russia treasury bonds. So why not? There's virtually no risk of non-repayment. There's basically no risk of default. You get a much higher interest rate for relatively safe. Unless something like this happens and Russia decides to go off the deep end, which they obviously did do. So that's why a lot of people bought into Russia. That's the simple truth. And that, in a nutshell, is why the hedge funds are in such a bad position right now. And I finally want to acknowledge some of the other just comments that I have seen. AMC is over. I've been in for too long. When do you YouTubers not open up your eyes? When will you admit defeat? When are you YouTubers that are influencing us losers going to take responsibility and say you were wrong? When? You know, like I said in the beginning of this video, I think the bearish comments you see like this one should be seen as bullish. Because if you're watching this video, especially to the end, you're not like some of these people that are commenting this. Right? I'm going to imagine he's probably not an AMC. Doesn't even matter. He'll probably sell out soon. And that's just one guy. I'm making fun of one guy. I'm picking on one guy. But there's a lot of comments like this. Just go look. Probably under this video. Lots of comments like that. But the way that I look at that, being the long-term buy and hodler as I am, is I look at that and say, hey, that is one person. That is another person. That is another person that is going to buy AMC when we start to rally. Even if they are so mad and they sell out with a massive loss, those will be the same people that FOMO back into the stock. I don't like to be the guy that FOMOs into the stock. I like to be the guy that is in the stock that sells to the FOMO buyers. And that's the key to all of this. So I hope you guys learned something. I hope you guys found value out of this video. If you did, hit the like button. If you did not, hit the dislike button. Doesn't matter to me too much. You should have learned something. Thank you guys for watching. I do appreciate it. I had to somewhat rant in this video, so I do apologize for those of you guys that are here, watch all the videos, show up to the live streams. Do highly appreciate you guys. And you guys will do well. You guys will do very well in AMC and everything else. And I will keep you guys up to date on AMC and any other trade that I am looking at. So stay tuned for further, later on videos throughout this weekend. We're going to be going over a lot as far as trades for next week, what is going to happen with AMC stock as well as the markets, because there is a lot of opportunities out there and you do not want to miss out. I promise you, you do not want to miss out. So on that note, subscribe to the channel and hit that notification bell if you guys have not already to stay up to date with all of those videos as soon as they are posted. And like I said, hit the like button or the dislike button if you did not like this video. Also, if you guys want to join the trading community, link down below in the pinned comment to do so for that, and links for free stocks down below in the description of this video. With Weeble and Moomoo, you will get up to 5 free stocks for depositing $100 to fund your brand new portfolio. Worst case scenario, you get some free stock. So by all means, take advantage of that free money. Not all the time that you get offered free money. Public as well, you do not have to deposit a single dollar to get free stock in public. So also check that out. Thank you guys for watching, and I will see you in the next one.